We're less than 3 hours into trading on Friday, February 25th. Hello, traders. Thank God it's Friday. Been a crazy week in the market. Short week, but a crazy week with the Russian invasion. Market tanked yesterday, but man, it looks really good right now. Let's take a look at the market right this second. I want to show you a formation. I'm long S&P 500 futures. This is a compression near the high of the day when 1OP is falling. This is a bearish cross. When it rallies and it crosses over to the downside, we would expect the market to roll over. That's not happening. When the indicator rolls over like this and the market's compressing at the high, this is actually a bullish divergence. This is a sign that the current trend strength is very, very strong. So I am looking for a breakout right now. I am long right now. When this cycle runs its course, this is a bearish cycle as it's heading down. It's eventually going to tail and move back higher, just like this cross right here, which was actually a very nice bullish cross super early yesterday. There's your gap down on the invasion of Ukraine. There's your bullish cross right here. And you can see how the entire day it continued to creep higher. So this is just a gigantic bullish cycle of sorts. But if you're just following the indicator, you want it to rally above zero. So this would be your first bearish cross right in here. So now we get the indicator falling, 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 falling. What does the market do? Compress, 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 compress. Hey, we didn't get any action off of this bearish cycle. So we might as well wait and see what happens on the next bullish cycle when I don't see any market pullback, especially after this type of big sell-off on the open. I'm thinking, hey, this next bullish cross is probably going to be a good one. Comes in here. Do I jump on this right here, right now, Pete? Is this when I should buy? Right now? No. Draw your downward sloping trend line. You've got a breach to the upside on a nice green candle. There was your cross. That's your entry point. Now, you can start to draw an upward sloping trend line. You can use that for your stop. Nice, big, long green candle. New high of the day. Awesome. I don't typically like to see a retracement like this, but the open from that long green candle held. We know that we've had a lot of market volatility. Everything on 1OP still looks good. Here we go. Now we're starting to climb. Towards the back half of the day, we had already filled in the gap. So this was actually a very bullish sign yesterday. Plus, we've got 1OP skyrocketing. Okay, here we go. Starting to get a bearish cross in here. Got to be really careful. We might be able to get a bit of a pullback here after a nice run higher. So what do? We take profits on our S&P positions in here and we wait. We wait to see what this bearish cycle brings. Nada. Absolutely nothing. Market should be going down. It's not. This is a bullish divergence. Boom. There's your next leg higher. Boom. There's our breakout right now. And when you get these divergences, so let's say that you were long in here and you're like, well, yes, I should exit because after this type of volatility, I don't want to see us make a new low of the day. So yeah, prudent thing is wait on the sidelines. But you know that that next bullish cross is going to be a really good one after you get one of those bullish divergences. And that was a good entry point right there. Beautiful. This right in here, when you saw that compression and that compression breakout, you knew you had to get long. Excellent right in there. So we've got another opportunity here because we're going to get this bullish cross here. Once we get that bullish cycle, I am expecting the market to continue higher, higher, higher during that entire bullish cycle. So when the video started 10 minutes ago, 15 minutes ago, I told you this is a buy. I am long. Look at it go. So let's go find some stocks. Let's take a look at the pick that I showed you Tuesday. Tuesday, please go back and watch my video on Tuesday. Been a super compressed week, 4-day weeks. They'd throw me out of kilter anyway. So when I came in Tuesday, I knew I had to do a video because I hadn't done one in a while. I'm trying to write a lot of content. I'm in the process of writing a book. I'm going to publish it online. So that's been keeping me super busy. Plus, the market's been keeping me really, really busy. Go back and watch that video because I had mentioned to everyone, I said, listen, this market is going down. And the telltale sign that I had on Tuesday was the fact that we had a bearish 1OP cross and that the market had already made a new low of the day. You can see these are signals generated by the trading system. So clearly marked on the chart. Yeah, there's a long right in there, but you got short. You more than offset that loss. That was a beautiful short. Got long there, basically a scratch in here, and then there's your short. So yes, there are trading signals based on the 1OP system. And let's go back and take a look at the price action on Tuesday. But I had mentioned to all of you, I am looking for the market to head lower. And when did I tell you that? I told you that right in here because we had a bearish 1OP cross and we were starting to tick down and take out the low of the day. And I had mentioned to you that this was not just a hunt for stops. This had something more to it because we were seeing follow through. And yes, the bottom fell out there. So we had Nike on our short list. I did not give you a long on Tuesday because the market was weak. So let's go back and take a look at Nike. There was an opportunity to get short Nike, and there was a decent trading opportunity. Well, what do you do with that information once the stock has started to regain itself and once it has some decent relative strength? Well, you have to draw your trend lines, and those are your guide to getting out of the position. So I had posted Nike somewhere in here midday. Yes, there was some nice downside to it. Draw your downward sloping trend line. Hey, we're starting to bounce off of that level. Take your gains on your short position. And here you got another attempt to maybe roll over and you get a bullish hammer right in there. You can see it. Well, that is a higher low double bottom. Well, you don't want to be short there. Now you start drawing upward sloping trend lines. Maybe there's a little something here, but not really. Okay, let's continue that upward sloping trend line. Okay, now we're starting to get somewhere right in here. The following day, which was Wednesday, you've got a nice little technical breakdown. And you don't have to short it here. You could wait for a new low of the day. That would be perfectly acceptable. And then you get really nice follow through. If you entered the trade on the premise that you were only a day trader, well, you would take profits here. If you went into the daily chart and you said, this thing looks horrible, I don't mind holding it overnight because the market looks really weak. Boom. Really nice winner. Take a look at that Nike chart. And you can see yesterday we had a bullish hammer. Well, this is similar to what happened in the market. I had also mentioned to you the pattern that we were looking for and that capitulation low that we'd be looking for in the market on a sell-off and a possible invasion. So let's go into the daily chart of the S&P 500 and let's take a look at what was left on the chart yesterday. Whoa, that is one heck of a long green candle. The market opened on its absolute low of the day. Everything from that opening print was higher. You can see it closed on its high of the day. So in the chat room, we were all getting long throughout the course of the afternoon, and we were holding our longs overnight because we expected follow through off of this type of pattern. Well, how do you know that, Pete? Things are looking pretty nasty here. That whole Russia-Ukraine thing has got me spooked. Yeah, it's got a lot of people spooked. When you start making these lows like this, there is a bullish hammer, and then you get your follow through. When you get your bullish hammer, you get your follow through. You go back on the chart and look everywhere where you get these bullish hammers, especially off of a relative low that closes on its high like that. That is a capitulation, very heavy volume. So yes, market looks good right now. What's in store? Well, I've got to tell you that unfortunately, and my heart goes out to every Ukrainian citizen. I'm Latvian, so I know what they're going through. I don't think anything's going to happen as far as the Ukraine. I think Putin's going to win. Unfortunately, I see Europe as being extremely fragmented. I see that they are completely dependent on natural gas, completely dependent on food from Russia. So any sanctions that they might institute are going to be relatively toothless. US, we're not doing really much of anything to help. Yeah, sanctions are sanctions, but Putin will go in, he'll take what he wants, and then, yeah, sanction this, sanction that. It's not going to matter much. As far as the market's concerned, this is almost a non event. And again, I don't take this lightly. I'm speaking only in terms of what the market is looking at and what the market is pricing in. Europe can't even block Russia from SWIFT, which is a system used by the banks. If they were able to do that, that would be pretty substantial. But they can't do that because there are too many European banks who could possibly fail if they shut that off because they've got exposure to Russia. And a lot of the European banks, very, very weak anyway. They've been pledging junk to the ECB for many, many years. They were not forced to take the write downs from 8 years ago. And so they're already on weak footing. So what does that mean? That means Europe is absolutely toothless in all of this. And it means that there's not a lot that's really going to happen from a market perspective as far as the Ukraine invasion. Horrific event. But as far as we're concerned, that cat is out of the bag. The market reacted yesterday. It bounced off of it. In essence, it doesn't care. But what it does care about right now, it cares about inflation because inflation is putting upward pressure on interest rates. And the FOMC is about 3 weeks away. So Fed officials have been more and more hawkish, and that tone is souring very quickly. You add high oil prices to the equation, you add high food prices to the equation, they are going to have to hike. They got inflation completely wrong. Completely wrong. And now they're having to play catch up. And now you have Fed officials who are ramping up their expectations for rate hikes. In fact, most of them are looking for a 1% rate hike by July. That is substantial, especially considering that none of them thought we would be hiking rates in 2022 just last September. So the market does not like shocks. We can expect that between now and the actual FOMC statement in mid-March that we're going to see some more volatility. So for right now, enjoy the ride. We get above the 200-day moving average, then you can use that as your stop. Let's put up those major moving averages. You've got the 100, you've got the 200. This is going to be resistance. That would be a nice natural place to take some profits. Obviously, if you get back up to the 100-day moving average, you want to take some profits there and expect that we're going to see some jitters. Once we get that first rate hike from the Fed, I believe that everybody's going to take a little deep breath and the market will be able to regain its footing after 2, 3, 4 months, especially if they continue to increase interest rates. That's when we could really start to see the market form a base and rebound as long as economic activity remains stable. And that's the key component. That's what asset managers do. They take risk off heading into an interest rate policy change like this. They evaluate, and if the market is fine, the economic conditions are fine, then they gradually start coming in and buying. We've had some of the biggest market rallies in history during a rising interest rate environment. I also took a look back historically. The market has also had a tendency to rise during periods of inflation, even on a real basis. So if you took the percentage gain in the market and you backed out inflation, the gains would still be positive. So inflation's not going to stop the market. Interest rates aren't going to stop the market. The war is not going to stop the market. So everything looks good. And there's always one caveat. As long as there aren't any credit issues, because that is the one thing that can lead to a sustained market decline. I don't see any right now. So everything's good, but I'm always watchful because credit conditions can change very, very quickly. So there's your backdrop of what I see happening over the course of the next month or so. I do want to take a look and find a stock for you. And I'm going to go right to my favorite search, which is in swing trading. It's Pop Bull. First stock on the list, ABBV. It's going to be hard for me to find something better than this. Look at the strength in this stock. Pauses briefly, bullish flag, next level, another bullish flag, next level, M5, 5-minute chart, very, very strong stock continuing to move higher. ABBV, I think it's good today. I think it's going to be good for the next few days. As long as you've got that market tailwind, it should continue to go higher. There are other really, really strong stocks. We're going to go through Pop Bull, take a look at some of the others. Very, very choppy. This is Philip Morris through that horizontal resistance, but chopping back and forth. Not crazy about that. X also very, very choppy. US Steel, BMY, pretty nice. Only reason I wouldn't pick it is because it's got this resistance level right here. So I click GTC, going to double click on that candle. There's my GTC alert line. When it gets through that, yes, I think BMY has a chance to continue to go higher. KO looking pretty good, but very choppy up in here. So I need to see better. I want to see a nice sustained pattern. IGT, JetBlue. So those are the rest. This is nice downward sloping trend line, breach to the upside, multiple support in here, higher lows. That's all good above the 50-day. NAT was the symbol there. And I can go in and I can take a look at another search. And I'm just going to go in real quick. We'll take a look for bullish trade signal. We're going to take a look at strength versus the S&P 500 on a daily basis. Stock making a new, actually it's above the prior day's high. Heavy volume today, good option liquidity. Run the scan. These are some stocks that we'd be looking at. And we'll click on a couple of these. SLCA was one that I liked, got through that horizontal resistance. B means earnings before the open. Heavy volume, yes. Choppy, so you have to buy dips on a stock like that. 5-minute chart, got to buy dips. Got to buy dips. You'd be taking profits up here and waiting for the next dip to reload. That's how you have to trade commodity stocks. So that one looks pretty good. PANW looked pretty good also. You can see how it's compressing near the high of the day. Very, very choppy stock going to the D1. This is why it's not the stock of the day. This is nice downward sloping trend line, breach to the upside, a couple of stacked long green candles, but you can see this thing is all over the place. So it's a big mover. You can day trade something like that, but pretty hard to do anything on the swing basis with a stock like that. And GLNG, liquefied natural gas breakout to horizontal resistance. Yes, GLNG looks good. Choppy stock. Runs higher, upward sloping trend line, take your profits. Pulls back, downward sloping trend line, entry point. Upward sloping trend line, breached, take profits. Downward sloping trend line, breach to the upside, enter. That's how you play these commodity stocks. So they trade like commodities. So you have to use technical analysis. Downward sloping trend line, breach to the upside, entry point. Hits that high right in there, get a bearish engulfing candle. Uh-oh, that's a sign of resistance. Take profits. You don't even have to wait for any kind of downward sloping trend line. Downward sloping trend line, you could enter here, but you're going to be stopped out pretty quickly. So choppy stocks like this, commodity stocks, you have to be more careful. You have to be more of a trader. Really good opportunities in them. So ABBV, that is your pick of the day. Have a great weekend. We'll see you next week. One more look at the market. Let's see what it's doing in here. I believe the market is going to continue higher. Have a great weekend. We'll see you next week. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.